Pull the trigger.
How's it, traders, and welcome back to Paradigm Flip. Hope you're all doing well. I apologize if I am sounding a bit rusty. I'm feeling a bit under the weather, but nonetheless, we continue and move forward. Today, I wanted to touch on the GBP Chief. Wanted to go over a trade setup, and hopefully, it will aid in your guys' education and learning. Right? I do not want you guys to actually take this setup. I repeat, do not take the setup. I am not a financial advisor and I have no authority to be giving anyone financial advice. Nonetheless, observe the setup and learn from it, okay? And the setup that I'm looking at is you're on GBP Chief, and we're going to start with the daily framework, right? And you'll notice that price has basically taken out this previous low, right? And that occurred after a extension lower. You can see that this run lower was very sharp and fast, right? And you can see once we took that liquidity, we had a whole lot of profit taking in this location, right? As you'd expect all these sellers to look to exit at the liquidity below this low. And as a result, we've basically been getting a bounce or a pullback, right? And as of now, it's turning into a range which is expected of a mean reversion play. Okay, and if we just go to the lower time frames to look at the framework surrounding the setup, right, or the setup surrounding this framework, rather, right, we can take it down to a 30-minute chart, right, and we just have a look at this area here that's currently unfolding. Okay, notice that is that run down into that liquidity and we got that rejection. Right now, there's a couple of things that occurred. Okay, the first noticeable thing is that we had this large area of volume after the rejection and we had this rally higher, right? So, which tells me that in this location, there were sellers, okay, and they failed to push price any lower and they capitulated, and this is the result, right? And there was a whole lot of demand coming out of this zone, right? And that is basically a volume node, and we can draw a market profile over that location, right? And when price returns to that POC area or the area of highest volume, you can expect a buy response, right? It doesn't have to be a buy trade in terms of a long-term objective, but it's expected that there's at least a bounce that can occur in this location. Okay. Nonetheless, you'll notice that we rallied up very sharply. Okay, and there was a lot of buying coming in at this location. Okay, right. I'll just mark that there. Right. Something also just to point out, you'll also notice that the volume in this location, after price rallied, you'll notice that price traded into the highest volume in this area, and you can see the market traded off that area. Okay, and once we traded into this level, right, we did so after taking out a previous low. Okay, now I want to remind you that the bias on this, right, can be expected to be long, and the logical reason is that we've taken out liquidity, right, in this location after an extended run lower, right. There's bound to be profit taking, so we can expect a pullback. Okay, and a pullback usually develops either in a range or you can get a sharp move higher, and this one is developing a bit rangy. Okay, so if you just think of a simple pullback, right, this is the premise, right? When you get a impulsive move, right, you can expect a pullback, okay, and you can expect it to develop in many different types of ways, right? And this is obviously just one of them, right? And this seems like this is what we are getting in this current location, right? And obviously we are looking to trade towards this liquidity here, right? And that's the premise behind the trade. Okay, so having said that, right, we are building our trade idea around that framework. Okay, and the idea is that we are looking for buys, right? Just in case I didn't mention that. Now you'll notice that we traded into this volume, right, after taking out a previous swing low, and we saw a sharp rejection, right? So a lot of buying coming in this location, right, or a lack of selling, right, and therefore the market rotated higher, right, because there is a lack of supply at these lower prices and we have a rejection print. Price trades higher, we take out this previous balance area, so whoever was selling in this balance area is now gone. Okay, and what we can actually do is draw up the volume profile for this day, right? Okay, and you'll notice the area of highest volume is this location, right? So an area where we had both buyers and sellers, or two-way money, uh, is this location right here, right? This is the highest point of two-way money, right? So above this area here, right, obviously anyone who was selling in this location, right, is underwater, right? And anyone who was buying in this location, right, is possibly profitable, right? However, after this run down, it's most likely that any buyers capitulated. Okay, and in this area here, buyers are basically in a strong position, right? And you can see that on the pullback, we basically pull back into that level and we get a reaction and another reaction, and we basically trade below liquidity, right? So we get a stop hunt, and on this chart we have another low here, right? So we get a stop hunt there again as well, right? So you can see that fake out in this location, and that's basically a good sign that we can expect higher prices, right? Once we get that lower print rejection, right, we get the strong move higher, right, and we are now breaking minor structure and pulling back currently, right? So it's safe to assume that we can target this previous high and this previous high, right? You'll notice that we are also above the 50 area, right? We are basically in a C point. Okay, right, we are in a C zone and we are above the 50% of the balance area, right? So right now we are in a capitulation zone, and sellers are most likely going to capitulate, or they are in a position where there is a possibility that they can capitulate, right? So um, not to say that the trade is 100% going to go to the targets, right? But there's a very high probability because it's based around sound and logical ideas, right, surrounding the price action, market participants, and structure. Okay, and we also have a higher time frame framework that we are basing our trade around, so we can basically anticipate price trading higher and taking out that liquidity. Okay, and that's all I wanted to touch on, right? And just observe the trade, see what happens. Okay, right, I'm expecting price to run the stops of this previous high. Okay, so this is basically my target. I know I said a mouthful, right? But go over the video, try and understand what I've said. Okay, it's not a guarantee that this trade will go. Whenever you put on a trade or whenever you call a trade, there is obviously a risk involved. Please do not take the trade based on my advice. I'm not a financial advisor, I repeat again, right? And just observe the trade and learn from it. Okay, and until next time, I'll catch you all on the flip side.